afternoon, traders, and welcome to today's daily market review. It is the 3rd of July 2015, and today we're going to be looking at the FTSE 100 stock, Scottish and Southern Energy. So Scottish and Southern Energy has been in a steady uptrend from the 17th of March right up until the 20th of May. We then saw a correction from the downside, which has unfolded in 3 steps, which many refer to as the ABC or AB equals CD correction. Now, this is a very common reversal pattern. The tricky part is knowing when the CD or C leg is at an end, and then pulling the trigger and getting into the trade with the continuation of the trend. So we break the chart down into 3 distinct parts, that being pattern, price and time. So in this instance we have the ABCD pattern, which we have identified. We have 3 separate Fibonacci cluster zones. Our first zone at 15.29.21 to 15.24.33, second 15.15.96 at 15.08.95, and our third and final zone at 14.93.77 at 14.91.77. We've also applied our Fibonacci ratios to the time axis of the market, and we've measured some low to lows and some low to highs and some time cycle ratios. We have produced some high probability dates of the 6th to the 10th of July, which you can see has come up between them in over 4 different time projections, and our second being the 15th to the 17th of July, as we can see from these 3 cycled ratios. So the price action of the C leg has entered into our first Fibonacci zone at 15.29.21 to 15.24. Now this produced a slight bounce up until the price of 15.65. Now the question is this the beginning of a major reversal? So in terms of our price action, we have price action has entered into our zone. In terms of our dates, we're a little early because our high probability time window is from, say, the 6th to the 10th of July. So what can you further look at to give you some indication that the reversal may be underway or may not be? Well, we can look down at momentum, and in this case we have both the weekly and the daily momentum both oversold. So as we all know, just because an indicator's in the oversold position doesn't necessarily mean that we're going to see the reversal of price action, but it gives you a reinforcing factor when you take all other factors into account. So what we typically do here at Train to Trade is we will drop down to our entry time frame, which in this case is the 60-minute time frame, and we have the C leg, which has entered into our zone, isolated from the rest of the price action. So for those of you who study Elliott wave or have an understanding of impulse and corrections, you should know that most impulse waves, or well, all impulse waves, will unfold in 5 waves. So if we look at the B leg, which is entered into our zone, we can clearly count 4 waves: 1, 2, 3 and 4. So what does this tell you? Well, just by understanding impulse waves, it tells you that we should be expecting further downside. Okay, so even though the price action has entered our zone on our daily time frame and we've seen a slight bounce, the 60-minute data tells us that only 4 waves of the C or the CD leg has unfolded, so we should expect further price action to the downside. So in terms of the high probability reversal taking place now, we believe that we still have a little time, maybe the first time window before the reversal takes place. So what we typically do here is we will project the possible future termination of the fifth wave, and then we will look to see if that coincides with our cluster zones on our daily time frame. So I'll make a few projections here. So we'll take wave 1, project that from wave 4. We'll take some further APPs of the price action and we'll project those from wave 4 also. We're going to use some external retracements because as many of you who know who use Fibonacci, many trends will tend to terminate at prior external retracements. It's typically the 1.272 and the 1.618. So what we're looking for is a confluence of Fibonacci zones, and then we're going to cross-reference those with the ratios on our traded time frame. So in terms of the projected zone for the end of wave 5, we have 1524 down to 1527. Okay, so the projected end of wave 5 is a zone between 1524 to 1517. Now, this doesn't necessarily mean that wave 5 will end here, but it's certainly going to be a high probability place for termination, and somewhere we would want to pay attention to when we're looking for an entry trigger. So 1524 to 1517 in terms of cross-referencing that with our daily time frame. We can see that that overlaps with our first zone. Okay, so we initially saw the market come down into our first zone at 1529. We then saw a slight bounce, which when we look on the 60-minute time frame looks to be the wave 4, and then we're going to see a fifth wave to the downside, which we forecast will be in and around the 1524 to 1517. So in a nutshell, in terms of Southern Energy, we have the weekly and daily momentum both in the oversold position. We have an AB equals CD correction. We have price penetrating our first Fibonacci zone. We've identified 4 waves on the 60-minute time frame, so we're expecting one more wave to the downside before we see a possible reversal and continuation of the uptrend.